All right, everybody. Ladies and gentlemen, hello and welcome to us here at Nadex. My name is Philip, and I will be once again your presenter for today's webinar. Today it's the market movers for October 23rd, and boy, the markets definitely are moving, so we have a lot to talk about. Please have a look at your webinar interface. You can see that small questions box, and right now, let me change the slide here. I would appreciate a very short yes or why in that box to just let me know that both the audio and the screencast are working properly, and that you guys can hear me well and see the slides actually changing. Perfect. Thank you very much, everybody. Really appreciate it. And guys, I want those sessions to be interactive. If you happen to have any questions, please let me know and do my very best to answer those questions as we move through the webinar. This shouldn't be just me for half an hour talking against the wall, but rather I really appreciate the feedback that you guys can give me. And yeah, if you have questions, that's what I'm here for. So please, let's keep those questions coming. As I mentioned, the webinar is scheduled to run for around about half an hour. And of course, before we get started, you already see those first risk disclaimers. Please take a moment of your time to read through them and make sure that you're really comfortable with them before continuing with the webinar. Essentially, this says that trading, of course, involves risk. And you should understand those risks and the instruments you're using before you're getting active in the market. Neither Trade with Position nor myself are investment advisors, and therefore nothing that we say should be considered to be actual investment advice. All examples are shown for educational purpose only, especially for the live part of today's webinar. I will tell you what I see on those charts, but let's be absolutely honest and frank here. I don't have a crystal ball. I have no clue what's happening next. I can just formulate my opinion and build cases. And those cases are the cases that I usually tend to trade then. But trading is really random. The outcome of any one trade is random. I don't know if my next trade is a winning trade or a losing trade. Nobody knows. This is just how trading works. What we can do is, when we apply proper technical analysis, we can stack the odds in our favor, which means out of 100 trades, if we perform our tasks as traded properly, we should be able to come out ahead with maybe 60 potentially profitable trades, or 70 out of those 100s. But there will always be losing trades. So even if my analysis is spot on today, or was spot on today, let's be humble here, the market could still do something completely different. So please make sure you understand this. It's just educational content and purpose that we're providing here. And what I'm giving you is actually just my opinion, which is as good or bad as everybody else's. So, all right, that being said, let's move on to the next slide here. Here we do have the Nadex risk warning. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Past performance is not necessarily indicative of future results. Nadex contracts are based on underlying asset classes including forex, stock index futures, commodity futures, cryptocurrencies, and economic events. Trading can be volatile and investors risk losing their investment on any given transaction. However, the design of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to US regulatory oversight by the CFTC. That being said, let's have a look at today's agenda. Today it's the market movers, which means I will explain to you guys while looking at those charts, what I'm seeing on those charts and how I intend to trade certain types of setups. So it's really focused on technical analysis. One thing that we must make sure to understand is that trading should always be coming with strategy in mind. You need to have some idea, you need to have some kind of blueprint why you want to take certain trades or not. You must know what you're looking for. Just eyeballing a market and thinking, this market looks like a long to me or like a short to me, doesn't make much sense to me, because I just mentioned that the outcome of any one trade is random. So what I have to have is some kind of edge, and I only can have this edge if I follow a repeatable process. So that this 60 out of 100, or maybe just 51 out of 100, that this actually is able to manifest itself. So for me personally and my colleagues here at Trade with Position, it's always strategy driven. I must have a strategy before I place a trade. And what is it that this strategy actually does for me? Let's have a look at this at the using the live markets here. And I'm now switching over here to the big moving market right now, the S&P 500. Sure enough, beautiful steady uptrend. How did I know that this was an uptrend? Well, it was easy to see those higher highs and higher lows. Next thing to note here is I've seen those moving averages. I'm using a 10, 20, 50, and 200 period moving average. And I don't care if they cross each other. I don't care if price crosses and touches one of those moving averages. What I want to see is this kind of fanning pattern. I can see that the 10 has been for a long time, or had been for a long time, above the 20, which had been above the 50, above the 200. I only get this structure if the market is in a trend. And guess what? We do have this fanning structure once again. The only one which hasn't fallen yet into place is the 200. But just by the speed of this move and the momentum, I'm pretty sure, yes, it's definitely a downtrend, and those moving averages 10, 20, 50 already are in place. How do I use those moving averages? Well, I'm using those moving averages as a sign not only for this quick visual analysis what the trend structure most likely is like, but rather also I want to see that price pulls back to price equilibrium levels. Price has pushed all this way here. I could have shorted the market at that point. However, we have moved away quite a bit from those price equilibrium levels. One characteristic of price action that pretty much everybody in the market agrees upon is that price is mean reverting, which is just a fancy way of saying price is pulling back from time to time to its moving averages, or the moving averages catch up, but price can never move away from its moving averages for too long. And this is just what we saw here once again. Would I have shorted the market here? No. Yes, it's clearly a move to the downside. However, we have been so overextended from our moving averages. Let's make it just a little bit larger here. We are so overextended from our moving averages, it doesn't make sense. There's always this risk of a snapback. Price forcefully pulling back to price equilibrium levels. And this is just added risk that I don't want to have. Here, price pulled back. Where did it pull back to? It pulled back to price equilibrium levels, and this is what I use the 10 and 20 period moving average for. Price pulled back here into my moving average sell zone. If you want to put it that way, price was able to catch its breath, gather some more strength, and then it was ready for the next leg lower. Now, was there any possibility to check in advance where this pullback might be going to? All right, so with my technical analysis, I like to use what we like to call leading indicators. If you use a moving average in a conventional way, well, price crosses the 20, crosses below the 50, that's a nice sell signal here, isn't it? Guess what? You got that sell signal when price was actually trading here, down there below. So definitely you were very, very late to the party. You were not able to sell this market here at the cross of 2,876, 75. Rather, you got that signal, and when you triggered that trade, you would have been somewhere here at 2,750 points. Lagging indicator, you get the signal when it's already late. The idea is I want to have leading indicators. I want to have an idea about what the next move might be like. What is the potential price target for a move? And one very powerful tool to use are definitely Fibonacci retracements here. What I can do is I can just pick my Fib retracements here and draw them from this low, for example, all the way up here to the market high. And from this point onward here, I knew that those levels are significant levels. 50 to 61.8% is another kind of price equilibrium. And sure enough, price got to those levels here. Price got to those levels also here on this pullback. So that was a first indication. Now what I like to do is I like to stack those Fibonacci retracements on top of each other. So I'm using just another one. I'm going to another significant low in the market, which was here. And I'm just drawing those lines in once again. And guess what? Where the market is sitting now is pretty much the full retracement of all this move here 100% retracement, and this happens to cluster perfectly with a 61.8% retracement. Also, this whole area here, and if I go for different other clusters, I can also see that this area here tends to cluster as well. So all those levels where the market actually, when the market actually started to pull back, I knew those levels up front because Fib retracements are leading indicators. Why are they leading in nature? Well, I was able to draw that Fib retracement from this point to that point. Let's make it even clearer here to that point. Which means I knew those price pullback areas here, even though the market hadn't even yet started to pull back. I just knew if we get a major pullback, then a pullback here to the 50, 61.8 could be the most logical first stop. And sure enough, the close of this first candle was very, very close here to that cluster of 38.2 and 61.8% retracement, just a little bit below it. Is this perfect? No. Does it work all the time? No. But it gives me an edge. If I can stack my probabilities, if I can use those Fib clusters and Fib extensions, and I get more and more points or of retracement extensions and pivot points, and I don't know, everything coming together, pointing at certain price levels, I feel that those price levels tend to develop some kind of magnetical power, let's put it that way, and that price actually is being attracted by those price levels. Leading indicator, I have an idea about what the market might be doing next. I don't know for sure, there is never a guarantee, but yeah, that's the main basic idea here. Did I think that the price from here would continue on directly down? No, because I mentioned price is mean reverting, so I wanted to see this pullback here first, and I haven't done that before, but let's just try it together. Let's get rid of those to make the drawing again a little bit clearer. How deep was that pullback? Well, from this high to this low, and guess what? That pullback took us almost here to the 50% level. Again, does it work all the time? No, it doesn't. But guys, if I see a drop of that magnitude and I think, all right, I want to step in and try to catch that falling knife, I think that market is pulling back. Neither that candle nor that candle would have given me a perfect structure for that. For this one here, my stop loss would have been down there. I don't like to actually trade those kind of pullbacks. If I wait for the trend continuation trade, waiting for the pullback and then looking for the next leg lower, this is usually a safer trade. Safer by meaning the probabilities are more in my favor. I could still lose that trade, absolutely sure. But waiting for this pullback makes more sense to me. So I wait for the pullback and I know into which area this pullback might be going to, because I knew with my Fib retracements that here in this area, somewhere here in this area, the market could be pulling back to. I could be waiting there with a limit order and just wait then on lower time frames. You will first always see that the market is tipping over on those lower time frames. If we looked at this move here, why do I talk about it if I can show you? All right. So you saw that market has shifted here back again into already an uptrend, but it's just an uptrend on the hourly chart. And this is exactly what I would like the market to look like in this pullback. We have to understand that just the pullback on the daily chart will definitely be some kind of uptrend on the lower time frame. So the hourly chart here, clearly an uptrend. Again, do I think that it makes sense to trade this uptrend here on the hourly chart? I have to understand that it's a counter trend trade on the higher time frame. And for that reason, my risk management must be spot on, and I would trade that trade probably with a lower trade size if I traded it at all. And here we get these warning signs. Market is pulling back. It's pulling back way too deep. Usually I want to see that a pullback takes me just into my moving averages and then price continues higher. Here that pullback broke through my moving average buy zone. The moving average buy zone started to close down, and the move actually stopped only at the 50%. Sorry guys, at the 50 period moving average. Market moved higher, failed to make a new higher high. And I'm just looking here also at RSI. That's the situation where I would be looking for RSI to scan for overbought and oversold levels, because now I'm actually really waiting for this market to trip over. Usually I'm using those indicators here just to scan for convergence or divergence. But in this type of environment, I'm looking for that. I have that strong assumption. I've built my case that I assume that the market will be failing to make a new higher high. And if I get this overbought reaction here and see that the market is going down, this could be already the first trigger to trigger me into my short position, not only on this time frame, but also on the daily chart, for example. So making sure to use those different time frames in combination and understand what one move on one time frame would probably look like on the other one, and where does the market usually start to trip over and change direction again, obviously on those shorter time frames. And then it's just the usual old game. You see the market is going lower, pulling back, going lower, pulling back, going lower, and now it's just pulling back once again here into our moving average sell zone. And so far, this looks like a brilliant downtrend to me. I can see good convergence, which means every time the market actually started to make a new lower low in price, I can see this lower low as well, both in RSI and in MACD. This is confirmation that this market actually is going lower here on the hourly chart, and this is now just a pullback. If this is just a pullback on the hourly chart, reiterating that case, let's have a look at the 5-minute chart. And sure enough, on the 5-minute chart, that trend has already changed. High, higher low, higher high, again, higher low, only by a hair, but still a higher low. And now, I don't know. Is this a tradable uptrend on the 5-minute chart? No, doesn't make sense. Could I use this now as a potential that market is tipping over? Might be too soon. I would wait a little bit longer, but the idea here is the key is to understand that this uptrend, higher highs and higher lows on the 5-minute chart, is just a pullback on the hourly chart. Let's do it even crazier and have a look at the minute chart. Much more pronounced uptrend here on the minute chart, of course. Get a feeling for how those different time frames are connected with each other and how those markets then actually move and look like. So here, once again, you can see lower high, and here also lower momentum and divergence between those major highs here. In MACD, RSI is a little bit converging. However, do I like to trade the 1-minute chart? No, I don't. I like to have a look at higher time frames and take it from there. This was just to illustrate an idea or concept. So this market is going lower, and maybe as an exercise, you think that this is really a huge drop in the market, and sure enough, it's about now 10% that this market has gone lower. That's a number. However, just to give it perspective, let's zoom out. Let's zoom out and let's switch to a monthly chart here. Come on. Let's go to a weekly chart. This time series here starts at 2009 for this market. Obviously, the market was already a little bit lower before, but let's just assume that this actually was the low. I'm starting with the low there, and I'm going to this high here. And guys, you can see if this market truly corrects, really big, major correction. We haven't even hit that 38.2% retracement of that move. Just keep that in mind. If bad things really happen and this market truly decides to go lower, I personally think the next stop could be somewhere around 2,600. Here you have the price cluster. It's easy to identify some horizontal levels of support and resistance there. And the next area most likely is, again, let's draw those lines, and next area most likely truly is around this area here, 2,128. Just look at where price really touches this level, here acting as resistance, here acting as support, and shoots higher again. Sure enough, the next one to use is right here at the 50% retracement. So 1800 becomes a really, really important, attractive price target here. So if 2600 breaks and we go below that, I don't see much holding this price in this area here. It's really just shooting for 2128, and then here for 1800. Does this happen? Will this happen for sure? I don't have a clue. It's just if I see the market dropping, I feel that those will be natural levels for that might have the potential to stop a potential market drop. Let's put it that way. Guys, any questions so far? Considering my use of Fib retracements, of horizontal levels of support and resistance, stuff like that. Any questions in this area? Also the change between those different time frames and why I changed them and what we can see and learn there. While you might be typing your questions, clear new lower low in the market now. Let's just, for the sake of completeness, have a look at the VIX. And we learned last week that the VIX actually is, or I think it was the week before that, that the VIX is just the implied volatility of all those options in the S&P 500. Not all, but for a certain formula, it's the fear index. If people think markets might be moving fast, especially falling, implied volatility is going higher, and essentially this is what the VIX is showing me here. And I can see that the VIX has now started to trend higher. Usually it's coming down again and settling here for its range, but right now price is definitely shooting higher. And if we zoom out once more, you can see no problem. Prices could spike much higher if bad things happen. Here, 2015 and 2009, even higher, 95. And those huge and fast spikes are one reason why I never want to be short implied volatility in any dedicated volatility product. Just to reiterate that risks. But clearly, fear is picking up. The VIX is moving higher. Clear indication for that. Now, another market that I would like to briefly cover is Euro against the US dollar. Euro against the US dollar, downtrend, moving sideways. We've seen some lows here, now higher highs and higher lows. However, already gone. Next, lower low and another lower high. So that market has changed once again to a downtrend. And I can already see that my moving averages are now back in place here. And one thing that I noticed and that I think, let's change that horrible color, and that I want to just put in here is, I realized that the market has made two low touches of this price level of round about 114.30.35. First touch, second touch. The type of trade setup that I'm looking for here is our so-called momentum breakout strategy, which means price is compressing against a flat level. What is a flat level? A flat level is a price level, or a price point that price has touched before at least 2 times. Personally, I would like to see more touches. I would like to see at least 3 touches before the breakout. Next thing that I want to see are small candles compressing against this flat level. We should also be very close to a moving average sell zone in a perfect world, in a perfect setup. Let's drop down here again, maybe to a, let's go, no thanks. Let's go here to let's move to a 4-hour chart. And you see once again that flat level, first touch, second touch, price is, we have convergence here already, another convergence here, and very close encounter there. I want to see small candles like here, more compression, closer touch, and how's it called? Retest of this level, confirming this level would be really nice here. And finally, I want to see the chance for convergence on the break of this level here to the downside. That's the setup that I'm stalking. I intend to trade that level on a lower time frame, like maybe the 4-hour chart or the 1-hour chart. But the big setup, I saw it on the daily chart, which gives the setup way more significance to me. And if I can get an entry here on those lower time frames, like the 4-hour or the hourly chart, that would sweeten the deal so much more and would make so much better tradable here with those Nadex contracts. We just got the question which type of charts this is. That's actually a browser-based chart, and the company is called TradingView. I have no affiliation with that company whatsoever. I don't get anything if you use those charts or not. And let me just be absolutely clear here. Finding the perfect charting package is like looking for the needle in the haystack. I haven't found my perfect charting package yet. I'm pretty sure you guys are using your charting packages, and I've tried many. I'm still looking for my perfect match. And so definitely not a recommendation. This is what works quite well for those webinars. And I just leave it there. It's not a recommendation. Just be sure to understand that and to use that. All right, guys. So Euro US dollar, rather interesting here. And yeah, if we break, where could we be going to? Let's zoom out. And here it's then just once again looking for where might be potential levels of support and resistance. Sure enough, this area of 112, 113 looks rather intriguing. We see many touches here in this area, and this is how I put those levels on the chart. I just pick that line and I'm just moving it around, and I'm just eyeballing touch here, touch there, closing counter here, pretty close there, acting as support here. All right, 108.5, something like that seems to be a good valid level. No rocket science. It's just really putting those lines out there and trying to see where those lines actually make sense and stick. All right, one more market. Usually if bad things are happening, then people run to gold. And we haven't seen this huge reaction to gold in the past. Gold has been going sideways, and now just recently gold has started to pick up its pace and move a little bit higher. And just wanted to make sure that you guys are aware, gold is now currently actually sitting in an uptrend. We already saw a minor higher low there, definitely higher highs here. The 10, 20, and 50 now have finally fallen into place. However, with all this range where the market has been there, I think it's pretty easy to draw in some lines. Yeah, encounters there, here again, and now we just traded into this level and bounced off. I like to give my trades room to develop, and this room for development is not here if I take a buy right there, because I just know that this level is there above me, looming and waiting for me. And the picture I like to use is, if I want to accelerate and speed up and go on the highway, I want to have free space ahead of me, because otherwise accelerating, taking a position, taking a trade doesn't make sense. And this line here, this is just like a solid brick or concrete wall standing in the middle of the highway, and I'm just accelerating into that wall if I took a position here. Doesn't make any sense for me. However, what is a tradable scenario for me here? I want to see that price actually breaks above this level. And if price is then coming back to test this level again from the upside, we know that if resistance is broken, it turns into support. So if I get a buying opportunity, let's just try to draw that in somehow. If I think that price is moving higher here, I would expect that price actually starts to come back again to test this level. And from there, I would expect price to push higher if that break actually is successful. And if this test of that level happens to be then in my moving average buy zone, then I stack the probabilities already a little bit more in my favor. I have then several factors going for that trade. I would be in an uptrend. I would be working on top of a solid support resistance level, and I would be buying at price equilibrium levels, stacking the probabilities. So gold is definitely interesting, nothing to trade for me there yet, but once we get the pullback, things might be looking differently. All right, guys, so that's pretty much already from me. Time's up. Yeah, guys, thank you very much for tuning in today. I hope you enjoyed today's session. That was a little bit useful and interesting for you. If so, I really appreciate the comment and the feedback. And yeah, looking forward to you guys tuning in again for our next webinars. If there are any questions, Joseph, you're absolutely welcome, no problem at all. And yeah, guys, looking forward to catching you guys next time. Until then, use those interesting and volatile markets to your advantage. Be careful, but the nice thing with those Nadex contracts, it doesn't matter if you want to be long or short. There's opportunities to be had on both sides of the markets. So thank you very much for tuning in. Happy trading over those next few days. Take care and bye-bye.